Hello and thanks for tuning in. I'm Daniel Kovach and today we're going to present a tutorial on the Quantguy indicators. I've had a lot of interest in these and at best what we've done thus far is teach you how to set them up. I'll put a link in the description to that tutorial, but today we're going to focus on the indicators themselves and how you might use those to trade. Today we're going to focus on the momentum indicators and the reversals indicator. There are some crypto-specific indicators that come in the package, but those are going to wait for another tutorial. Before we get started, you want to make sure that you've gone to the Quantguy website and registered for the indicators. Again, you get a package of the momentum indicators, the reversals indicator, and the crypto-specific indicators. This process was outlined in the previous tutorial. Obligatory legal disclaimer, trading can be dangerous, blah blah blah. This is just for informational purposes only. We begin our discussion by reviewing some of the pitfalls of momentum indicators. In fact, they're often very messy and very jagged, as we'll see in the next slide, especially for smaller time frames, and they tend to react wildly as the data collects or the data aggregates as the chart is forming. In this example with Bitcoin, we're displaying the chart as well as the on-balance volume indicator. As you can tell, the on-balance volume indicator is very jagged. Now this is on a day chart, but as you could probably imagine, this would be somewhat annoying to have to deal with if you're on a smaller time frame like a 5-minute or even a 1-minute chart. The solution to this is to apply signal processing algorithms to filter out the noise. And we've done that on the Chand MO, the OBV, and the momentum indicator. To look for trading signals, we need to recall an important fact about momentum, and that is that momentum always must revert to the mean. So the key is to look for divergences between long-term momentum and medium-term or short-term momentum. For our purposes here, the Kovach OBV, shown as a blue line, represents long-term momentum. The Kovach Chand, which is shown as a purple line, represents medium-term momentum. And finally, the Kovach momentum indicator, shown as a red line, represents very short-term momentum. It is important to realize that these are not moving averages, so a moving average crossover strategy, for example, won't work in this case. What you do want to look for are divergences. For example, if I want to set up a long trade, I want to wait until the short-term momentum dries up while the longer-term momentum remains strong and is in a bullish direction. A good example is shown here in this chart, where the short-term momentum, again shown in red, spikes up very sharply, but then gradually trends downward over time. However, the medium-term and long-term momentum, shown in purple and blue respectively, remain strong. This indicates that any dips present buying opportunities. The same logic can be applied to short trades too. For example, in this one, the long and medium-term momentum remain bearish. However, the short-term momentum spikes up sharply. This indicates that any rallies can be shorted. In this example, we're using the deviation between the long-term momentum and the medium-term momentum. The medium-term momentum has dropped off, but the long-term momentum has remained strong, and there's quite a dip here to present us with a nice buying opportunity. In this example, that big red bar is registered as an extreme dip on the short-term momentum, whereas it doesn't really register on the long or medium-term momentum. Again, this tells us that this little dip might present a nice buying opportunity. In order to discuss the Kovach reversals indicator, we first need to review candlestick reversal patterns. These are configurations of candlesticks that may indicate when an asset is about to revert. There are many different candlestick reversal patterns, and we won't discuss them here. The reason why is because I've programmed them for you within the indicator. Candlestick reversal patterns are particularly relevant at levels. These levels could be Fibonacci levels, points of control, extremes of Bollinger Bands, or relative lows and highs on the chart. Without levels, we're prone to generate false positives. In this chart here, I wrote a script that identified all possible candlestick reversal patterns. As you can see, they're quite numerous, but aren't necessarily useful. However, when we cross-reference these with the upper and lower bounds of the Bollinger Bands, they become quite useful. Next, we want to discuss a trading strategy that takes into account multiple Kovach indicators. First of all, we have the reversals indicator, which is basically a central moving average and an upper and lower boundary, very much like the Bollinger Bands. It's also cross-referenced with the candlestick reversal patterns, which are shown as red or green triangles. Also, we have the long-term momentum, or the Kovach OBV, shown in blue, and the shorter-term momentum, the Kovach Chand, shown in purple. We could have also used the Kovach momentum indicator, the red one, whichever you feel comfortable with. Using these tools, we can derive two strategies, a trend-following strategy and a reversal strategy. We'll start with the trend-following strategy. The context is entering a long position. In this case, we want to look for bounces off the upper band of the Kovach reversals indicator. These will be confirmed by red triangles. Further, we want to make sure that the momentum indicators are both bullish. How you would trade this is you'd want to place a limit entry order on or very near the central moving average. Next, you'd want to take profit at the upper bound and perhaps put a stop loss on the lower bound, or maybe somewhere in between depending on your risk tolerance. In this example, we see some potential bullish trade setups for NEO. Notice that the long-term momentum, shown in blue, is quite strong. Also, you see some red triangles indicating some dips back to the central moving average or very close to it. We only have one false positive highlighted in yellow. In that case, your limit order entry simply wouldn't get filled, and you at least wouldn't lose anything. Here's another example with gold. Both momentum indicators are bearish, but we have a green triangle at the lower bound of the Kovach reversals indicator. This is followed by a brief relief rally, which comes somewhat close to the central moving average but doesn't quite touch it. Again, this is why it's important to know your product and the volatility and how much it varies, because in this case, this was a good entry opportunity. The next trading strategy we're going to cover is the reversal strategy. Again, in this case, the context is going to be a long trade. Here we want to look for bounces off the lower bound of the Kovach reversals indicator. These will be confirmed by green triangles. We want to make sure that the long-term momentum, again shown in blue, is bullish, but the short-term momentum, shown in purple, is waning. As far as how to trade it, you're going to enter at or near the lower bound of the Kovach reversals indicator. This should be the point where you see that green triangle. You want to take profit at the upper bound of the Kovach reversals indicator or the central moving average. This will depend on your risk tolerance. You want to put the stop loss very close to the lower bound. Unfortunately, it's difficult to quantify what very close actually means, as it depends on the product. Very volatile products will have long wicks, which may extend quite a bit past the lower bound of the Kovach reversals indicator. Less volatile products will not have this problem. In this example, we see that short-term momentum is heading back to the mean, or at zero, whereas the longer-term momentum, again the Kovach OBV shown in blue, still remains strong. A possible entry opportunity is marked by the green triangle circled in red, and in this case we were able to ride this trade up to the upper bound of the Kovach reversals indicator shown in the second circle. In the second example, we have an example of a short trade where the overall momentum, the long-term momentum, is heading downward, and the shorter-term momentum, again shown in purple, is picking up to center line. This time, the entry opportunity is highlighted by a red triangle. We were able to enter this trade very close to this point, and we held it all the way down to the lower bound of the Kovach reversals indicator. We exited at the green triangle circled in red. Thanks again for tuning in. That's about all for tonight. Please don't forget to leave your questions in the comments section. As usual, also don't forget to like and subscribe.